Dear clients, I'm Richard, Assistant Dealing Manager from Phillip CFD. Last week, 3 out of the 4 major US benchmarks ended higher, Russell 2000 being the exceptions, but all 4 remained in the red year to date. Nevertheless, after enduring losses over the past few weeks, US equity market attempted a late week rally, which most market observers attributed to strength in overseas markets, bargain hunting, as well as short covering due to oversold technical. In contrast, the Russell 2000 index, which is heavily weighted in price to perfection biotechnology stocks that were hammered by US drug price regulation worries, underperformed the large cap benchmarks as a result. In terms of economic data and cross-market actions, weaker than expected employment and inflation numbers drove investors on both sides of the Atlantic into safe haven government bonds. For instance, in the US, last Friday's disappointing growth in September non-farm payroll, 142,000 actual versus 201,000 expectations, resulted in 10 years Treasury yield tumbling below the 2% psychological level for the first time since 24th of August. Similarly, in the Eurozone, growing expectations for more ECB stimulus measures post last Wednesday's September's negative 0.1 CPI release sent 10-year German bonds yield down to its lowest levels in 4 months. Looking ahead, this week ushers in Q3 US earnings seasons, which is poised to take on the heightened significance against the backdrop of 1. Slowing jobs growth in the US, given that August non-farm payroll figure was revised down to, and 2. The economic uncertainty of China's slowdown. Evidently, the rates market continued to be unconvinced by the Fed's rate normalization timetable, as traders are betting that rate lift-off will likely take place only from March 2016 onwards, according to CME Group Fed Watch. Hence, it will be interesting to see if these earnings seasons can dissipate the notion that global growth is finally inflicting the US economy, and to help equity markets set the stage for an autumn relief rally. Clients may consider using Phillip CFD to trade equities and indexes across markets to capitalize on trading opportunities in both rising and falling markets. In addition, you may also trade using many more benchmarks based on different strategies which are available with Phillip ETF. This is all for today, and hope to see you soon in our next round of market commentary. Thanks for watching.